You're watching Famous Dave on YouTube.
All right, welcome to the Short Vol Show Live. My name is David Lincoln, and this is a tradition we've done a couple times on Sunday nights to come on as the futures reopen, and the futures have just reopened down 29. So looks like we've got some more volatility coming our way as we come to the week, possibly. Remember, we're on a Sunday night, and this doesn't necessarily always last, into the next day, but it doesn't look great when we're at down 29 on the futures. Let me see if I can fix my picture. It's kind of like I'm like too white. I'm always accused of being too white, but here I'm just way too white. Let me see if I can fix this. There we go. Hey, what's up, Edward? Let me see if did that fix there. Like I look a little bit less white there now. Yeah. So this is for you guys. This type Q&A type thing. However, I did want to talk about and look now down 33 in the future. So let's take a look just at the chart on the open here of the futures. And you can see, I believe it's coronavirus related. We'll continue to see what happens. Here's the 20-day, but let's just go to like a 1 hour chart, and you can see. What is that? Is that just not updating? Oh, that's Tesla. Sorry. Okay. You can see futures are down. Let's talk about Tesla though here for a second. And am I having more problems with my keyboard here? Let's see. Oh, here we go. All right. So there's the futures, and you can see futures are down a little bit. Sorry, technical difficulties. Yeah, futures open down, currently down 33, and whatnot. Yeah, and they certainly could be positive by the open. Sunday night doesn't necessarily mean anything. It's just we're back trading again, and here we are. And I think this is coronavirus related, a lot of it, that sort of thing. So let's get to Tesla. All right, so Tesla, look at this chart and tell me what you think of it. It just seems to me that this is going to be going for a fall at some point. I mean, but who knows if it goes to 2,000 before the fall. But I did sell, and when you look at that chart, it looks like a scary place to sell anything. It looks like you almost want to buy volatility because look, it certainly doesn't look like it's going to stay where it is. Right? It could go anywhere, but it certainly doesn't look like it's going to stay where it is. If you change the the chart, it can look differently. That's like a 2-month chart maybe, and so let's talk about Tesla. What I've been doing is I was just leaning short by selling almost at the money call spreads. I was selling like the 9.4960 call spread, something like that, like $20 call spreads. But most recently, and I'll show you what I have on now so you can just see all my positions real quick. It's all this stuff, and if we break it down, it comes down to in the front week, which expires in 5 days, I'm short the 980 par or the 980 1,000 call spread 3 times. And, this is that's $100 out of the money, right? And so it's a $20 spread. I was able to sell it for a little over $3 per spread. So, and now it's showing me I have a maintenance call. I'm not sure if that's real or what, but But yeah, so if this stays below 1,000 in the next week, then I will collect, $1,000 from that spread. But then I sold some downside too. I sold the 820 800 put spread. So there's a $20 put spread, but I believe, let me just double check on this. I believe I only sold that once. Yeah, so I'm short $120 spread, right? So in real money terms, that means that I could lose, $2,000 minus what I sold that for if we do gap down below 800. And my fear really is the downside here. I haven't wanted to go out like after hours way short. I have been leaning short most of the day. Like I'll probably come in tomorrow and immediately get short, but I haven't wanted to go out short just because. Why? Because it gapped up $50 on Thursday, and then a couple days before that it gapped up too. And it's not a whole lot of fun being short deltas when you get these gap up moves. Look at the. As soon as I come back on, I have to go back off again. Look at the gap moves here. Boom, boom, boom. However, my concern in Tesla right now is really very, very much to the downside. But it hasn't paid to be short. In fact, I've gotten crushed being short. I think I've lost something like $4,000 being short over the last 3 weeks. So there's that. So now I'm just my strategy is very, very wide iron condors. An iron condor being selling away out of the money call spread and selling away out of the money put spread. So for example, I put on this iron condor that doesn't expire this week, it expires next week. It's a 6 March expiration, and I sold the 780 770 put spread and the 1,110 call spread. So $100 out of the money each way. I sold a $10 spread. And the plan is kind of moving forward. Just keep doing that every week and kind of roll it out. But let's look at the volatility products because I know why most people watch this channel. And I was talking about selling some calls Thursday, and right after that we had the gap up. And if things continue like this, I'm showing the front month futures up a 0.20, the second month up 71 cents. Currently, right now, that doesn't really mean anything for Monday, as has been pointed out many times. We could be up by tomorrow morning, but UVXY was up on Friday, and so was VXX. But as these things move higher, this is a good time to enter a short vol trade. And I know most of you know that already, and we've been here before. But yeah, so from around 10, a couple days earlier last week, UVXY right up around 1240. And pretty much for me, the higher this stuff moves quickly, the higher it moves, the more likely I am to actually favor going closer to expiration. So, when nothing's going on, I'm looking for like farther out stuff, like 60, 80 days out. But when we get an up move like this, and if we have another up move tomorrow, I might look to stuff that's like 2-3 weeks out and just try to have that delta for a quick down move on the first up day we get. Just have those short deltas in UVXY or VXX for that down move. I was looking back over, like, let's say that I just kept on my VXX. I was trading out of the money puts, right? So for those of you who are new to options, out of the money means options that are either higher or lower than where we're trading right now. So VXX right now, I'm on VVIX. VXX is around 15. So out of the money puts means puts that are below 15. And what I was doing right around December, when we were in a nice down move for a while in these products, but things have been disrupted for a while. We had, end of the year last year, we had pretty big contango, and we were moving down nicely. Here's a year chart, and you can see nothing because I'm in the way again, but here's a year chart, and you can see this nice move down, which got halted as we came into this new year. but I was buying, 50% out of the money puts a year out, and those being the Jan of next year puts in VXX. And if you look at those, they're really stalled out at this point. I was buying the Jan 7 puts, and the market's wide because we're closed, but right before the close on Friday, they were like 40-cent bid at 42. And so when I sold them out, they were like 50 bid. And so if I'd held on to them, they would have been losers since then. So I want to be careful with buying way out of the money puts unless we're in a situation where the market seems to be rallying consistently. It seems like that's disrupted at least for a while now. When we go back to I really like to look at like some, the big picture a little bit here. When we go back, we can see that we're off the highs right now, and we don't know how much that's going to continue, but it certainly could continue for a bit longer. I'm not real excited about putting on too much short volatility stuff. I'm not interested in taking any real big bets right now, just because of sort of the climate that we're in. I never really advocate going long volatility, but in certain times, I'm content to just keep my money safe on the sideline. Now, I know there's a lot of you out there, and I say guys because there's more guys that watch than women, but I know there's a lot of you guys out there that, you want to do something like, what am I going to do tomorrow to make money? And for me, I have to take a little bit more of a measured thought process than that. The market the market certainly can be irrational longer than we can stay with our accounts, certainly. So I'm kind of on the sidelines as far as volatility. Yes, I'm interested maybe in selling a couple out of the money calls at some point, have a small short position on, but I'm not loading up the truck by any means, because it really feels like we are going to be in a volatile environment for more than just a little bit. I mean, that rally that we had all of last year, it didn't even seem to make sense at the time to me, but now look at that. Wow, E-mini's down 48. Whoa. So definitely there is trouble in paradise for the markets right now. So so I would suggest, being careful, and that's obvious, of course. But it feels to me like Tesla, it has felt so strong. I've sat there the last couple of days, and I've just watched it trade like all day. And after being short and losing money being short this, the last thing I want to do is get long. And I want to kind of stay keeping a little bit of a short delta, because it's got to come down at some point, and I wouldn't want to be short for all this time and have it going against me, and then when it finally goes down, I have no position. But we'll have to wait and see what happens. But every time it goes down, it feels like people are buying the dip in this, and I know that won't continue forever, but it's so frustrating. Let's look at Friday action in Tesla just to kind of revisit this just for a second. But and I have to get out of the way again. And you can see them just buy, and the open goes down. It gets down to 880. And then they just buy the dip. And every time it sells off, they seem to buy the dip. It happened the day before, too. They buy the dip on the close. And these people are like, buy more, buy more, buy more. And, I'm going to love it the day that these people, there's no fear in people's minds about paying $900 for Tesla, okay? A year ago, people didn't feel comfortable paying $350, but now there's people in there that have no fear when they buy this. And I have to think that some of these people have made a lot of money being long Tesla, and they're buying into these, there's these predictions that Tesla will be 1,000, 5,000, all this stuff. Now, that's just not reality. Comparing Tesla prices to that of other automakers, it's way higher now. And yes, I understand that it could be treated like a different stock, but there's some number where it just doesn't become a reality anymore. It doesn't make sense. The other thing that's true is there's some number where if the rest of the market's down a certain amount, if the Nasdaq is down 150 in one day or 500 in one day, at some point you have to say to yourself, maybe I shouldn't be paying 3 times where Tesla was trading 2 months ago for Tesla. But at this point, we haven't reached that. People are still so enthusiastic about the stock and don't have a fear in the world about paying $900 for it. And it boggles my mind. It boggles my mind. But I'm smart enough not to have a big short on because I just continue to get killed on it. So it's a tough place to be in. I appreciate you guys, all your support. Tesla to drop 100 points tomorrow. I might have thought so at some point, James, but who knows at this point? I mean, it could be up 100 tomorrow. It's tough out there. It really is. And yeah, you know what? Cash can seem boring, but it doesn't seem boring when like you all of a sudden I've had it before where like I just lost a bunch of money at once and just wish that I had done nothing. So learn from my mistakes and maybe just sit on the sidelines for a little bit. Why not? Nothing better than to just sit on the sidelines for a little bit and enjoy the fireworks. Like I felt so much better. I wisened up last week and I cut my small delta in half in Tesla and I got my delta down to like really small, and I was so much happier because I spent like the week just sitting there like just sitting there glued to the screen and miserable. And you don't want to do that. You don't want a position that's so big that you're just freaking out. I've gone to cash on all of my every like retirement account, everything like that. I've gone to cash in about a month ago. Not that I think that like the end of the world is coming or anything like that. It's just that I'm looking for a better place to re-enter the market, essentially, and I'm fine with my money not making a return at the moment. I don't see the opportunity there to have it. A bunch of people also in my personal life, I'm sure you guys find this being traders. People in my personal life ask me what they should buy. Oh, you shorted some Tesla. Well, that's cool. I hope it works out for you. Even he's down 45. Yeah, that would be nice, James Knight. That would pay for some super chats. Thank you very much for the super chat, by the way. I really appreciate it. I used to get more super chats, but you've been my only super chat over the last 2 or 3 times. Anyways, but yeah, it's scary out there, and sometimes it's just nice to be in cash. And I just don't see the VIX stuff setting up where it's interesting for me to have a short on right now. Let's take a look just at VIX Central just for fun and see what we have. Now, remember, this isn't going to be a real picture when because the VIX actually is not printing right now, so the spot is not correct here. We could pick the, if we were to guess where spot was, where do you think spot would be right now if we were open? Your hints are that the front month future is up 150 and the second one is up 87 cents. So where do you think spot would be? Any guesses in the chat? I have a guess, but I'm not going to tell it for a little bit. You guys can guess. Well, I guess I have a bad guess because mine was Edward. Mine was 19. I think that definitely, if the VIX were open right now, it would be above all the futures certainly. And 19, it could be even higher. I would think it might even be higher. We'll have to see. I think that this is kind of discounted because everybody who's trading the futures also knows that this isn't actually the morning and things could turn around a lot. That's very kind of you, James Knight. I wish the best of your I wish the best for your Tesla short tomorrow, and we'll have to see. It was very frustrating. Like I said, look, Tesla on Friday, the market was down and it opened and it went positive on the day in the afternoon. I'm like, what is going on? And you know what? It comes down to, I really think it comes down to, you can crunch all the numbers you want, but I really think it comes down to people just being enthusiastic about this company, and they just want to buy it every time. People have it in their minds. These guys, oh, thank you. You guys are too much. Thank you. Thank you very much. Thank you, VC analyst and James Knight. Thank you very much. That's very kind of you. I think people have it just in their minds that Tesla is going to 5,500. I heard someone say 5,500, and I think people are thinking to themselves, "Wow, I got to get it before it's 1,000." And I really believe these people are going to have a rude awakening at some point when this goes back to 600, and I do think we will see that happen soon. Just because, and that doesn't mean that Tesla is not a great company and that it's not going to go higher at some point. But this, I just think that this spike like it is not sustainable. I think it's gotta consolidate somewhat. It can't just go straight up and then, I mean, look at this. That's not consolidation there on the chart. It can't just go straight up. It just can't. So it's like, what do you do? What do you do? Do you sell? It's scary because you don't really want to sell calls because there is the risk that this could go to 1,200 in one day. But I don't think, if the market started rallying big time, then that's more palpable than with the market down every day. It seems like it's going to be hard for it to get there. But, looking at Tesla, you couldn't believe that there's any problems with the market at all. I mean, it looks fine. It looks like it's going to 1 million, but we'll have to wait and see. And so let's look at VIX right now. I mean, we're in a mid-range for the VIX, but I think that makes a lot of sense. Some people have made light of the fact that, like, oh, VIX is elevated. I don't feel like it's elevated because I think there is a consensus that this rally is not going to continue forever. However, we haven't had huge damage in the market. We haven't had huge down days, and we're still, I mean, if you look at the E-minis, how far does this set us back? It only sets us back. I mean, even where we are now is higher than we were in October. Look. We're way higher than we were in July, so we're not set back a year. We're only set back like 6 weeks, really, or even let's see, no, not even that. We're only set back to the beginning of February at this point, right? So the damage to the charts is not big at all. I mean, this could easily recover from here. Yeah, I would agree with you, William Davis. This isn't okay to short some vol. Certainly, this is sort of. My only comment, my only sort of official comment on volatility is I would not take a huge position either way here. But I'm with you if you think this is an okay time to short some vol. I'm even with people who might have an opinion that this is a time to get long some volatility. If you're a long vol trader, I'm with you on that too. Let's see what the VVIX will do. I'm not a huge fan of the VVIX as an indicator of anything. VVIX is going to tell you essentially the implied volatility of options on the VIX futures, and I want to dig into time and sales for VIX futures and see where that's coming from. So we've seen a lot lately where VVIX goes up because they're buying puts in the VIX, and so buying puts in the VIX is not going to indicate that there's fear in the market, but it is going to raise the VVIX. So you want to dig into where the VVIX is coming from. It's generally thought that over 100 is elevated, but over 120 is really elevated. But most people like to look at it as far as like what's the trend in the VVIX, and so if we dig into that just for a second here, we can see where we are right now. But I'm not a huge fan as the VVIX of an indicator of very much when it comes down to it, just because it can come from so many different things. But it looks pretty elevated right there, doesn't it? I feel like there is some the markets could be, a sell-off in the markets could be corresponding to. I get the feeling that the markets would not like Bernie Sanders being the presumed candidate, as opposed to, I think they would like a Bloomberg better, or anyone other than an Elizabeth Warren better than Bernie, maybe. But it's very hard to parse out what the markets, how much of the sell-off comes from what. We know we've got the coronavirus out there. But beyond that, you can't separate out and say, okay, well, where would the market be if it wasn't for the coronavirus, or where would the market be if it wasn't for this or that? And the market, it pays attention to different things at different times. Let's remember again, there was an article last week saying the dollar is moving higher, gold's moving higher, and the market's moving higher. And all of a sudden, that seems to have turned around in a day or two. But once again, let's not get ahead of the horse here. We only have a little bit of damage to the chart here. Yes, we're off the highs, but we're not very far off the highs. So, talk to me when we've taken out, talk to me when we're at the E-minis get below 2,700. Because right now, it's not a huge sell-off, and we've actually come back a little bit, even since I've been talking in the E-mini. So, we'll have to see what happens. Huge, James Knight question, does this feel like a huge vol speak? What does it feel like in the days leading up to one? Well, huge vol spikes are generally going to occur when volatility starts out lower. So generally a huge vol spike is going to happen when the VIX is like down to like 10 or 11. Being that we're already up around 17, 18, it takes a lot of the bang out of a spike. Because, well, if you think of the math, it's a lot harder for volatility to double when it's 18 than when it's 9, right? And a lot of times when you have a big spike, it comes out of nowhere. There's no warning. You have like a black swan event of some sort, or something. It just comes out of nowhere and you don't see it coming. You might see some rumblings a couple days before, but it just catches you by surprise. And so that's what makes them so scary. And, we could get a huge spike tomorrow, but as I said, it's not going to have the same firepower as if volatility was lower than it is now. So I can't really, you can't really tell, obviously, when a big spike's going to happen, and there aren't any signs to really point to. I remember when we had the Volmageddon thing, we had a couple sort of spiky days ahead of it where a little bit of stuff was happening, and we had stuff happening where, like, the markets were up, but the VIX was up at the same time. That kind of thing. It's scary because the market is at all-time highs and it's been going up and up and up. And so that's the scary thing. And people say, well, there can't be a crash again because the way the market structure has changed, in that there's so many people using passive investing right now. and all this thing. But as long as humans can be fearful and humans are pressing buttons, then there's certainly the possibility of a big down move. And I can't really speak to charting MACD and that sort of thing because I'm not a huge chart guy. But it just feels to me like we're in an environment where in a more volatile environment, and I think we could stay there, through the time of the elections, possibly. But yeah, definitely. Back to William Davis's question before, it, we could rally. There could be some news that a cure for the coronavirus has been developed and it's been contained. Not that many people really have. It hasn't affected a super huge amount of people, and this stuff could move back down. So certainly, it's not a bad place to sell some stuff, and I have certainly been considering just jumping in and selling some. If you're to pick some at the money calls in UVXY, for example, out a week, I mean, you could even sell the front week ones. Let's say this opens. Let's just say for the sake of argument that this just opens where it closed. Okay. You could sell some 12.5 calls, or you could even go a little bit deeper, anticipating a move down, and sell some of the 12 calls maybe for like $1, something like that, $1.10. And if it doesn't work, if volatility continues, then you roll them out at the end of the week, but you're still collecting decay. The other way, yeah, that's a good point, Ed. This epidemic is not over yet, certainly, and it could grow bigger. I tweeted out a picture from the Duomo in Italy where I used to hang out when I was younger, and there's like nobody there. But another strategy that I like to use with UVXY when we've got stuff happening is to buy calendar put spreads of a lower strike than we're at now. So, for example, let's say we open 14 tomorrow in UVXY. You could do something like buy the June 12 put, okay, and sell the 20 March 12 put. And so what this is we're doing a calendar. We're buying a calendar spread in UVXY, and we're positioning the strike where we think it's heading towards. So in this example, it would be heading a little bit lower. You could even pick like the 11 strike, but you want to pick a strike where the option you're selling has some value to it. Like you don't want to be picking like the 9 strike and you're buying, you're buying. Or the 8 strike where you're buying the 8s in June for $1.15 and you're selling the 8 put for 10 cents or something. You want to pick stuff where you are selling something that has some value. But in this example, to sell the March 12 put and buy the June 12 put, this is a good trade for a time when it's moving lower, you're pretty sure it's moving lower, but you don't want to take a huge delta, and you want time to work in your favor. When we put the spread on, every day that nothing happens, or we move sideways, or we move down, you make money. And if we, heaven forbid, do move higher, you do have that time decay working in your favor, which is like if you lose a couple bucks because we move higher, you're going to offset it with a little time decay. So if we were to put 20 of these spreads on, for example, once again, this being the June-March 12 put spread in UVXY. If we bought 20 spreads, it would cost around $3,200. And I'm going to right-click on the mouse to model this. Make sure I don't have other stuff in here. All right, so I was kind of thinking that this was going to have us. Let's see if we put the 11 put in here for a second. So it was basically considering the 12 put to be totally at the money. But let's say that this had moved up to 14 tomorrow and we picked the 12 put. It's actually showing a long delta here for this. But if we were up around like 14, it would be a slightly short delta. And, as long as we stay above. And so in this case, basically what you're doing is you're buying some of the 12 puts out in June, but you're selling the March ones to help pay for them. And so if we stay elevated, those March puts will come out worthless, and you'll just be left with some of these June puts that you've essentially paid a lot for. So you're collecting $37 a day, and meanwhile, you can make money while we go sideways or slightly up. And you're buying some puts to put in your pocket for the future. So one of these calendar spreads could be a good thing to think about when we're in a more volatile environment. What I really want to just discourage people from doing in the vol products when we are in a volatile environment is just buying naked puts. Just because you buy naked puts, by naked I just mean you're buying puts and you're doing nothing to offset them. If you buy puts in UVXY and we stay elevated, those puts can just rot, and you don't want to have a situation where you're paying every day to have this position on, and you're starting to hope against hope that the market's going to rally. You want to put time on your side, and the way you can do that is either by selling something, like selling calls or selling a call spread. Now, we know selling a call spread and buying a put spread are two sides of the same coin, but you want to make sure that whatever option you're short is closer to where the underlying is now so that you're collecting money on the spread. David, what do you think about watching for breaches of the S&P's expected move, then positioning while the institutions are reacting more strongly? Yeah, that's a complex, a little more complex idea, but that certainly is something that we can learn from TheoTrade and Don Kaufman at TheoTrade about how much these institutions are following the expected move. It's a smart idea. Also, they talk about gamma and the firms that sell options, they've got to adjust their deltas when we get a move bigger than the expected move. It can start to perpetuate itself because they've got to go ahead. If we move way up, they've got to go ahead and buy as we move higher, and they've got to go sell as we move lower. So, yeah, I think that that's certainly possible to, that sounds like a good idea. But I would want to watch it a little bit longer myself to see typically what happens when we do breach that expected move. For the product that I've been trading recently, which is Tesla, every time it goes down, they buy the dip, and it always seems to want to stay inside whenever it makes a move to the outside, it wants to get back inside that as quickly as possible, it seems like. For a 3-week short strategy. Well, I a lot of times I respond to what's going on. So I am a position trader and I will have positions on, but for a 3-week short strategy, a 3-week short strategy, I would recommend buying a put spread and just when you get a little spiky, I would, when we get a move up, which we certainly have, if we open unch tomorrow, we're still in an elevated area, I would look to buy a put spread. And we could look at some examples of this kind of put spreads that I would look at if we went to VXX, for example. I would look to kind of at the money put spreads, but I would give myself time. So I'd probably look for May or June at the money. So right now, VXX 15. I would look for something like the the 17, 14, 16, 13, this sort of spreads that's giving us a short delta and seems reasonable. And the good news is that a lot of times people analyze these spreads based on like what has to happen at expiration for me to make money on this. And I think that's a mistake because the reality is we can trade these at any time before expiration. So you put on a spread like this, okay, this is a $3 spread. The numbers aren't, and you might even take it down to like the 16.12. All you need to make money on this is this to be lower at some point between now and expiration. And, the next day we rally, you could take this off for a profit. And the reason I pick a spread like this is because it doesn't have a whole lot of time decay. The one option offsets the other one. So let's theoretically put this on 30 times. And I'm going to analyze this once again. Make sure we don't have other stuff on here. And look at your theta, $10 a day. That's certainly manageable, and that's just based on the fact that we're closer to the option we're long than the option we're short right now. But this number, if we move lower, as we move lower, it becomes positive. You can see down at 970, it's positive. So I would look for something like this. You could also certainly do this, Tomas, in UVXY, but with UVXY, you just want to make sure that you're not getting ripped off because the spreads are a lot wider in UVXY, and you want to make sure that you're not paying a ridiculous amount. If you just come into UVXY, you haven't looked at the markets in a while, and you just jump in and say, oh, okay, well, what do I want to do? Okay, well, let's look at this March, and you just queue up a spread, and you say, I'll just pay the midpoint. You could get ripped off. So UVXY has been harder to execute in, and certainly when it's spiking, they know that people want to buy the spread as opposed to sell it, and so they're going to set up the markets in a way where the midpoint is more advantageous for someone selling it than someone buying it, just because they know that people are going to buy it, and so they want to set it up so that the edge is to sell this, because as this moves higher, the retail paper is going to come in and want to buy a put spread. So they're going to move the markets so that it's advantageous not to buy the put spread but to sell it. So you just want to be aware of what the markets are, and you have total power over what you bid for something, but you just want to make sure that you're not getting ripped off in your pricing. And I think a better place to go is VXX, just because the markets are tighter and you're going to get a better fill. Oh, and as I look at Edward here, this question, it actually just pertains exactly to what we're talking about. One way to look at to help yourself with the bid ask on UVXY options, some of these models do have theoretical prices in this. Like, for example, on Thinkorswim, you can change the layout to theoretical price, but this is bogus a lot of times. First of all, you need to make sure that your date's correct here, but even with a date correct and everything, a lot of times they're going to make up the theoretical pricing just off of the bid-ask spread. So, but one way to look at it is just to, if you queue up a spread, let's say, for example, we're buying the 14 put and we're selling the 10 put, or the 11 put, let's say. One way to kind of get your bearings straight is if you pull it up, say, for the 27 March, check it out in different months and see if it makes sense. If it's at the money, it should be pretty similar in every month, right? And make sure that the month that you're looking at is very similar to the other months. That's one way of looking at it. Another way to make sure that you're not messing up is just to think about it, okay? So the 14.11 spread, it's a $3 spread. It's $3 wide. The most it can be worth is $3. So is it reasonable to you to be paying 2 out of the $3 for that spread? Well, let's see. We're right in the middle. If you're exactly in the middle of the options, right, then the spread should be worth about half the distance. The real value of the spread should be worth about $1.50 if you're exactly in between the two strikes. Now, that is going to change a little bit due to the hard to borrow status of UVXY. So you might be willing to pay a little bit more for the put spread because of the hard to borrow status. However, $2.85 to pay for something that could be worth $3 is too high. $2.75 is too high. The best thing you can do for yourself is to price these spreads out when nothing's going on and see what it looks like. The other thing you can do is I would just watch it for like an hour before you put the spread on and just see kind of where stuff is trading, see where it's moving around, and that will give you an idea. It's very easy to get excited about this stuff and just buy something. And, truth be told, you're going to get a better result because you are trading a spread than if you were just trying to buy a specific put or something. That's when you can get into real trouble. But the other thing you can do is you can price stuff out. All right, so if you're buying the put spread, paying $1.95 or $2, that's the same thing pretty much as selling the call spread for $1. So go over and see what's the call spread trading for. Well, in this case, trading for $1. So which would we rather do? Would we rather sell the call spread for 99 cents or buy the put spread for $1.95? I would submit to you that we'd rather buy the put spread for $1.95 because that means synthetically we're selling the call spread for $1.05. You'd much rather sell the call spread for $1.05 than for 99 cents. So in this example, if you see the call spread is trading $1 and then you switch it over to put and the put spread is $1.95, the put spread's a better deal than the call. You see how I'm doing that? The math. There's $3 between the spread, right? Between its strikes. So the price of the put spread and the price of the call spread, when you add them together, is going to equal the price of the distance between the strikes. If you're buying the put spread for $1.95, that means if you do the math, you're selling the call spread synthetically for $1.05. So if you switch this from put to call, you'd rather buy the put spread. And so that's going to tell you that the markets are not completely out of whack and the put spread's a better deal. And if you can get it for anything under $1, it's probably a good deal to do it. Just using and just comparing different months and messing around with puts versus calls can give you a good idea of kind of where you stand here. And then just in your head, say to yourself, is it worth it to me to bet $2 to make $1? How likely is it in my mind that this can get to 11 by expiration, A, and B, how likely is it in my mind that this is going to go back down again sometime soon? And when you look at the weekly chart and you see, well, it just was at 10 like 2 days ago. So it's certainly possible that it's going to go back to 10 in the next, 3 months or something. That certainly seems reasonable. So, use a little just bit of common sense knowledge. I was taught as a trader many ways of looking at things. There are people that would look at charts of UVXY. There are people that would say, well, I'm betting 2 to get 1. Does that make sense to me? Just looking at things in a number of different ways is going to give you the confidence to jump in there and do that on that one. And we'll have to see what happens, but it looks to me like we're going to open down again tomorrow, and this may not be the end of it. We were down Friday. Let me look at this chart. The trend it appears to have changed to downward, at least to the short term. How long will that continue? I don't know. But it is possible that we start to accelerate a little more from here. It can take the public a while to wake up to a trend. There's people that only check the market once a week or something. What are the advantages of selling calls in the vol products, selling puts in the indices? Yeah, they pretty much are just inverses of the other ed. And there's some people would relate one to the other and say, well, right now one seems cheaper than the other, or one's more expensive. Some people have like restrictions on their account, like they're not allowed to sell puts because it's a retirement account. The multiplier on indices is bigger. Certainly, like Edward says, the unique aspects of volatility products is we do have that contango working in the VIX term structure is a unique thing that the SPX doesn't have. Also, and the beauty of VIX products is that even if we just move sideways, you can still make money because of that decay aspect of them. As opposed, but the term structure right now is not in a great place. We got up to 5% right after expiration, but coming into to Friday evening, even I believe we weren't in a great place. I'm not sure if we were inverted at the close, but when we're in steep contango, these products have a unique advantage over everything else just because of that contango thing. But in a more general sense, yes, you're right, Ed, when you say that there's two similar things, that they are similar to each other in a way. And yeah, that's true. You have to put more capital. That's definitely true. And also, roll yield decay is a long-term thing. It happens over a longer-term period. So you want to just be aware of that. Nobody, it seems when you look at, the chart of UVXY and you see it's going down, it seems deceptively easy to make money in the VIX. You're like, oh, well, I'll just short it and I'll just hang out for a little bit and I'll make money. There's more things going on than just that. And a lot of people get caught because they're too short term and they sell something and you get a little up move and they get taken out of their position. There's, it's more complicated than just getting short UVXY, shorting UVXY and hanging out. And that's why there's an art to it. Certainly, you could have sold UVXY. We just went through a great period of like 6 months where it was very easy to deal with short vol products, and you could essentially sell calls every week in UVXY and make money, and it was easy money for like 6 months here. But we appear to have pulled out of that, and we're on a little bit more difficult ground right now. And it's good in a way because as volatility moves back up, it kind of like resets everything for us for another very nice move down by having some volatility. But in the meantime, things can be a little rocky here, and it appears like it's going to stay rocky for a little bit. And it might be something like we don't get a clear, nice, easy time until after the elections. I know the elections are a big thing in people's minds. Well, yeah, certainly, Ed. There are they are certainly related to each other, and yes, you don't want to put a huge amount of your account in play for the VIX, but when we are in a big contango time, I think that the VIX definitely is attractive for people because you really can get a huge amount of bang for your buck out of it. The key is just to kind of be able to identify when we are in a good spot. The other thing being just like if we do spike, if you can get into a short when we are spiking, then that is a great spot to be. It's hard to do, though, because everybody in the world is saying, oh, it's the end of the world. Oh, you have to have the cash on the side and the fortitude in your stomach to be able to jump in there and put that position on. And, we have had some up moves, but I don't think we're there yet as far as being in the middle of a mega spike where you'd want to just really put a position on. if the VIX were to pop to like 40 or something like that, then that would be a spot to do something like that. But we seem to just kind of be slowly moving upward right now, and we haven't reached that spot. All right, so I don't know if you guys feel a little bit better moving into the week or not. I certainly feel better because it seems like more people believe that Tesla may not be going to the moon. You know, I sit there alone at home and I watch Tesla, and it seems like everybody just loves this thing, and the market's going down. UVXY interview with Julie Cordova. Yeah, what's up with this Julie Cordova? She had like 2 videos, and they're getting like way more views than I do. I think you guys just don't think I'm as attractive as she is. No, she seems like a cool person. I've sort of chatted with her on Twitter before, but you know, I don't really trade nat gas and the other commodity stuff that she trades. I believe she trades oil as well. But yeah, check out UVXY Trader and see what he's got to say. Best of luck for her channel. I hope she has a zillion views. You know, there's plenty of room in the world for more traders to have channels. There's another person who's she has a channel that's done really well too. So best of luck to all those people. Yeah, go check that out. I believe she's a very attractive blonde, Lee, but I would prefer to just view her as another trader who happens to be a woman, which is a cool thing, and judge her based on her, you know, what she has to say about trading, other than what she looks like, because that's the most important thing, is how she can add to this puzzle of trading. And from what I've seen from her in the past, she's got a good handle on things. So best of luck to her and her channel, and best of luck to you guys as we move forward. I'm going to stay away from the blonde wig. I've already done that before, and I'm going to stay away from that. Thank you to Edward for being our first of hopefully many moderators for the chat, and thank you to you all for coming in and checking out everything. Exactly. Skills, not looks. We welcome women into this industry, and we want them to feel comfortable here. And, you know, some of the best traders I've known have been women. One of my mentors, Roma, is a brilliant trader. I also had a woman named Cinnamon with me in the pit. The 2 women who are on Tasty Trade were also traders with me at the SIBO. And, man, some of those women are cutthroats. You know it. All right. Cool. Thank you for everybody. Best of luck this week. I will be checking in pretty soon. Let's see what happens. I'm very curious as to what the open brings us tomorrow after seeing us down like this now. And for once, I'm not like super short the VIX when we're down like this. So can't have Tesla go down too much tomorrow. Actually, I can. Let's see. Let's take one last look at our delta for this position in Tesla as we sign off here. Let's see what we've got. So short 6 deltas in Tesla. If we down at 800, I'm long 10. So yeah, you know, small position. We'll see what happens. You know, my risk is to the upside, so having the market down is useful. Thank you guys for checking in. Thank you for all your support. You guys are great. You guys are the greatest. I really appreciate you checking out the channel. And we will see you for the next episode of the Short Vol Show Live. Bye now.
You're watching Famous Game.